Hi everyone, good morning, good afternoon, good evening, depending on which part of the world you are in. A warm welcome to all of you, and thank you for joining this STACS showcase session. My name is David, and I'm the Executive Director of STACS. And as you can see, you may have a question in mind right now, and that is whether we are missing another speaker. So yes, unfortunately, Sabrina just called me this morning and that she's not able to attend this. She's not feeling too good, so she has gone to see the doctor. So let's wish her a speedy recovery. So in any case, the show must go on, and this will be really a fireside chat between myself and Nadim, and of course the session may be shorter. So without further ado, let me first give a warm welcome to Nadim from BNP Paribas Security Services. And as we know, BNP Paribas is a global custodian, asset servicing provider committed to help their clients with their investments and cross-border distributions. So I appreciate Nadim for taking his time to join this panel. I will ask him to do a self-intro shortly. Okay, so this panel topic is digital transformation within asset and wealth management. Where are we now and what's next? In this new normal, this topic is particularly interesting for the AWM industry, as investors are always thinking of new ways about how their investments can be managed. They are embracing digital technology, getting more interested in social responsibility and other non-financial aspects of investing. So it'd be great to hear from Nadim. What is his vision of the AWM industry and how he is leading the digital transformation and how we can jointly unlock ecosystem benefits through the DLT. On the logistics side, we'll start off with this fireside chat, and then we'll follow by the Q&A. So without further ado, we will have Nadim to do a self-introduction. Nadim, over to you.
Thank you, David, and good to be with all of you today. My name is Nadim Jouhid. I'm heading the investment solutions within BNP Paribas, and I'm covering the entire APAC region. I'm based in Singapore. Within my scope, I have responsibility of services and products that we call middle office, as well as ESG, analytics, collateral management. So quite a wide range of activities that service our clients directly. I've been working for BNP for 15 years now, and mostly in the asset management business. And so I've seen the business evolve quite a lot over the last 15 years, and we'll be talking a little bit about that.
Thank you. Thank you, Nadim, for introduction. And personally and professionally, I know Nadim for a while. Yeah. So, okay, the theme for the first segment of question will focus on the current trends of the AWM industry. We hope to get some insights from, obviously, from Nadim, about his organization, about BNP Paribas, how they're getting on with the digital transformation. So to Nadim, we know that BNP Paribas is a global custodian, okay, with various business lines and strong focus on innovation, sustainability, and digitalization. So perhaps you can start off to share with us the current trends and the new normal from the bank perspective. Where is BNP now with digitalization? Feel free to highlight any of your product roadmap or any specific case study.
Yeah, thanks, David. So first of all, within BNP Paribas, we have quite a large amount of budget that we spend on a yearly basis on I would say digital, but transformation in general. Approximately 100 million, and that's across the group, the entire BNP Paribas group. 100 million euro on an annual basis is spent on making sure that we enhance the client experience. So every type of solutions that we develop and where clients intervene, that's where this budget will go to. On a general basis, for our entire technology budget, which is multiple billions on an annual basis, again, we spend 35% of that making sure that the technology is being lifted up, and we are making sure that whatever new tech is out there is assessed. Whatever changes are happening in the market, that we analyze it and see if we can upscale our services on the back end of that. So for us, digital is been a part of our industry quite, since the beginning, if you can call it that way. Automation has been, it's been a key element for us to develop that. We've been enhancing and looking obviously in the market on any type of evolutions that we can bring, any type of services that we can enhance with digital technology. So obviously, we have today the RPA. Everybody's talking about it. We've been doing that for quite a while now, using robots to improve our processes whenever we cannot do development. So that's a key element. And we've been working into since the last 4 or 5 years, learning to see how we can implement machine learning as well, natural language processing, and making sure that we use those technology again to enhance the processes that we have internally, as well as the client experience. For example, we have what we call a sort of a smart interaction robot. So our clients can discuss with a robot. So allowing them to ask questions, raise questions, get answers to it, and it's all done on basis of machine learning. So that's been deployed for specifically in the retail banking side, and we're looking to see if we can enhance that also in institutional banking. Obviously, digital, in the digital space, blockchain has been quite important for us. So we're looking specifically in these last years. We've been looking at how, what the crypto market is doing, how digital assets are becoming an important part of the investment landscape. But not only that, we're also looking to see if the blockchain technology by itself can help us, again, improve the experience that we can share with our clients, as well as the processes we have internally. I think a good example of that is obviously the Mercury Project. So we'll be talking a little bit more about that. But Mercury is a good example of how, together with a client, a fintech company like STACS, we've been able to develop an enhanced solution for our clients, specifically in the electronic derivative trading. So that's the listed derivative trading, where we felt a lot of pain, and clients were feeling a lot of pain. And with the help of blockchain, we've been able to remove quite a big burden, both for our clients, but also for our internal teams by automating it, and making sure that we can trade ETD, so electronic derivatives, within the blockchain environment. We'll be talking a little bit more about that. And obviously, as I said, digital assets, that's something we're looking very, very closely at. We're working with different partners on that. So we're working with regulators on one side. We're also working with local stock exchanges around the world to understand how they see and how they would like to see this evolve into the existing landscape. So in a nutshell, we spend a lot of effort in understanding what's happening in the market and how we can translate this back to improving the business for ourselves as well as for our clients.
Thank you. Thanks, Nadim. Wow, I think that's very impressive. When I hear 900 billion that is spent, on the technology investments. Wow. Yeah, we can see the commitment coming from BNP Paribas, and especially, into areas such as the RPA, machine learning, all these are the new technology. Yeah, wow, wonderful. So, and maybe just to add on a little bit to the question is that in terms of the impact of digitalizations, what would you think would be the biggest impact? Especially in the AWM industry, since this is an AWM audience, they may be interested to know what effect has DLT made in the, for example, the AWM industry. Yeah.
So I always say the same thing. If you don't evolve, you die.
That's true.
So to put it very simply, and in my business particularly, if you're not able to offer, so my business again, BNP Paribas Security Services, so we work with a lot of institutional clients, and if we are not able to offer value to our clients, they will simply look for better solutions elsewhere. So for us, it's key in the survival and in the in improvement of ourselves is to make sure that we're always looking to enhance the quality of our services and the quality of our products across the line. So what this means is we're always looking at the new, maybe not the new, but the trends and the technology that's out there to see if we can help us improve. One important point: technology is a mean. It's not a mean; it's a tool. So sometimes we confuse that. But for us, it's really to look at cases where we are directly able to identify value that technology can bring, and digital technology can bring for ourselves, for our processes, for our services, as well as for our clients. And this is where we decide to implement it. I think we've had some very interesting use cases, and I'm going to cite two of them. The first one is we've implemented machine learning on transactions. So we did that a couple of years back, and we've looked at, for example, so since we are processing millions of transactions for our clients. So when we say processing, it basically means we're looking at confirming those trades that we receive from investment managers, and sending them to all the banks, fund accountants, all the relevant parties in the world that are requiring to receive that transaction. So we're the middleman in that space. And what we've noticed is that we are identifying patterns in those transactions. With the million sets of data, we've been able to identify that a trade in a specific market at a specific time may cause a problem. It may break, as we call that in the institutional business. And it will require potential manual involvement. It could also result in delays in payments, delays in the investment process itself. So what we've done is we've used machine learning technology to analyze millions and millions sets of data to be able to assess where a potential break is going to happen down the line. So we can already predict some of the future issues that we might see for our clients. And this is one of the examples where we could use machine learning technology to predict potential future failures. We've done that a couple of years back. Another good example is obviously Mercury. So Mercury project that we've done with you guys and with one of the big investment firm here in Singapore is exactly that type of engagement. So within the Mercury project, the client came to us and said, we're noticing that when you guys are processing our trades, a lot of the derivative trades are just taking a little bit more time. You always have to intervene manually. And we were saying the same thing. Yeah, what we are seeing is in the derivative space, we have a lot of our operational teams that need to get involved, need to process it. Operational risk, obviously, as a consequence of that. So we sat down with the client and started within a design thinking environment. So within BNP Paribas, we have a design thinking lab, and we sat down with the client and we started embarking on this design thinking journey. What that meant is we've tried to identify what are the root causes. What are the potential solutions that we can implement to solve this? And we noticed there's nothing in the market. So it doesn't exist. In the current market, there's no active solutions that can solve those derivative transactions that are just not being processed on an automatic way. You cannot use RPA, you cannot use machine learning on that. So what we've done is we've decided that, when you can have a shared ledger, you can have a sort of a blockchain technology where all the market participants can engage and interact, you'll probably be able to save a lot of inefficiencies in that process. And as a result of that, we've been able, together with STACS, who joined us in that journey, we've been able to reduce 96% of our trade problems. So that's massive, specifically knowing that there's no other solutions in the market to do this. And again, what we've done is we started with a problem, we looked at how we could solve this, and then we looked at the technology to do that. And in the end, the conclusion was blockchain might be a good way to tackle this. Now, that's a good example. But what I see in general, when we look into how a company should accompany the digital challenges that are happening, it's very important that you have a company that's open for that. So within your organization, you need to be open to look at to look at opportunities in the market, to read what's happening, to understand what the new technology can bring in terms of value, not only for for your internal processes, but as well for your clients. So what that means is you need to free up bandwidth, and that's a big challenge for a lot of corporations. A lot of corporations just do not have enough time to have a dedicated teams or teams looking at solutions out there. So you need to make sure that you have enough time. Digital ambassadors, we've implemented that within our organizations just to make sure that those guys are looking at everyday world problems that are happening in the bank and understanding how they can translate those problems into solutions by leveraging some of the digital technologies that are out there. Obviously, those ambassadors need to understand the limits of that technology as well as the limits of the bank itself. And another point, what I would say in terms of challenges is make sure that you decide to choose the right project at the right time. As an example for that is, we've heard a lot about crypto assets, and our bank 10 years ago was definitely not ready to do this. And I think it has shown that the market itself was not ready to look at how crypto assets are and need to be integrated into the investment space. Today, over the last 2 or 3 years, most of the big banks and corporations are trying to, first of all, anticipate the changes that are going to come from that, as well as integrate it into their everyday processing. So make sure that you choose the right project at the right time. If you're too early, it's not going to work. If you're too late, you're obviously too late. Finally, one interesting point, and this comes back to the Mercury example I've just mentioned before. If you don't have the expertise and the technology in-house, just go out and get it. If there's new tech out there, it doesn't mean that you need to develop the expertise in-house. There are enough fintech companies in the world that are capable of helping you out. So close collaboration with your clients as well as with fintech companies will help you evolve and will help you create that value for your clients. So I would say, as a conclusion, the challenges are also opportunities to think and to review the way that you operate and the way that you implement digital in your organization.
Thank you. Thanks, Nadim. I certainly like your last point, the collaboration with the fintech. And thanks for sharing a little bit on the Project Mercury. The two of us will be having a live showcase later today at 12 p.m. Singapore time. So to the audience, you may wish to join that session as well. We will come with a live demo. I totally resonate with you, Nadim, on the part that about RPA, machine learning. That's where for fintech like us, STACS, we also are using machine learning, in our solutioning. So that's very great, and also thanks for sharing about the trends in the AWS industries and what BNP is doing with digital transformations. And I'll just move on to the next segment of questions. So I think that will be more towards individual, as an individual, because you are someone with 15 years of experience. Obviously, you have been in Asia for a while as well, so the Asia experience, the clients as well. So the team will basically based on your personal experience, your challenge, and the achievement that you have been dealing, leading. Digital transformation. So I guess that's where from product perspective as head of the investment solution. So what are the challenges that you are facing right now, maybe in convincing your stakeholders and your bank clients to adopt new technology? Are these the same challenge that you have been facing for a while?
So I would say, convincing your internal stakeholders is always a complicated thing. But if you are able to show the value that it brings for your organization, for your clients, I don't see why it wouldn't work. Obviously, you have to go to the standard steps, which are building a business case, making sure that business case is adopted, is accepted, is validated by everyone. You need probably a sponsor to make sure that that's agreed upon. So you need to make sure that in your digital journey that you're going through the necessary corporate steps that are existing in your organization. But once you arrive at that solutioning, you make sure that you do not only look at your simple developments that you can do in-house or based on your internal capabilities, but you open up and you look at all the different possibilities that are out there. So a good way of doing this, and as I mentioned before, is obviously to do the design thinking approach. And design thinking allows you to think outside of the box. It's very simple to get stuck into, we need to call in our IT guys and they will look at it and see how they can develop this. I mean, that's a standard reflex. But what we're saying is, no, you as a business owner should already start looking at the steps that are required to make that better solution arrive. So what that means is IT is good, but look at other options out there. And once you build that business case, include those other options and those other solutions in your setup. And in the end, when you make a decision, at least it's an entire decision that's supported by your organization and making sure that that everybody's behind it, so you can start developing it. Another good way of doing this is working with the client. What we've noticed is a very interactive mean is start small, do a proof of concept, build on that proof of concept, and then roll it out into a production environment. Proof of concept always works. Doesn't cost that much in terms of energy, in terms of money, but it brings a lot of value for yourself because it allows you to fail. If it doesn't work out, you can still change your path and try another one. So proof of concept is a real good thing. It also allows you to better understand the client's challenge and the client's pain points. I think if you look at most of the fintech companies that are out there and most of the disruptors, as we call them, they've all started out small, all started out with the proof of concept and try to figure out how that test can work out on that small scale and how they can build it out to a wider scale. We'll be talking about examples of that in the market and how those disruptors are all starting to knock on our door and say, hey guys, we want a part of your business as well. But nonetheless, if you're playing the same game, and playing the same game means, again, looking at digital opportunities, implementing that into your design thinking process, building a business case around it, start small, build it out big. There's no way why this couldn't work for any of the banks out there. There's no way why this couldn't work for any of the other organizations out there. So I believe there's still a lot to do there.
Yeah, fully agree with you. Yeah, POC, proof of concept, or proof of commercialization. That's what they will call it right now. So that's one way that when after you have done the POC, you want to go commercialize with it. And obviously, we can always go by a phased approach as well. The phase 1, phase 2, and phase 3. Yeah, and so just one area that I would be particularly interested, and maybe the audience as well, is that about social media. Yeah, because as we know these days, the investors, they have the social media platforms. For example, like LinkedIn, that they can provide their feedback and one way or the other on social media. So does this impose any challenge, or does it help with the digital transformation?
So I would say there's probably two areas where you could look at social media and how it impacts an organization. And I'm translating this back to my own experience within BNP Paribas. Obviously, BNP Paribas, we're placed as a bank across the globe, many locations, many different types of clients. So for us, it's very important to understand how our clients are perceiving us. So obviously, we're like any big organization, we're looking very actively into the social media world and just get some feedback from the market, from the perceptions that our clients are having, from the services that we deliver. So we have an organization and we have the mediators that are actively looking at that and making sure that we, the rest of the business, getting the right information out of this so that we can enhance, improve, and always look to be on top. So that's a key element on social media. What I'm seeing, however, if I position myself in the basket of our clients, institutional investors. So institutional investors are using social media for another purpose as well. They're using it just to make sure that the investments are going in the right direction, so that they've understood that the potential companies they invest into from a social media make sense into their investment strategy. I can use an interesting example on that, and this is what we've been interacting with our clients as well. Is you probably heard climate is a big thing. ESG is very big as well. So most of the investors, and we did a recent study, 79% of our investors, so the institutional investors we're working with today, believe that in 2 years' time, 100% of their investments will be around, will be driven by ESG. So will be driven by climate targets. Now, this is an important change. What that means is, if you're an ESG investor, or if you're a standard investor, you would have to understand what are the potential impacts of your future investments related to climate risk. So climate risk could be, your exposure to carbon. It could be your exposure to, COVID, exposure to potential, climate changes that are going to happen. So the best way to do this for an organization is to obviously look at the annual reports, to understand what the investors, to understand what the companies are explaining to their investors. That's great. It gives you already a great piece of information. But what we've noticed is our investors are also looking at social media. They're leveraging data that is not directly linked to that company itself. So, for example, if a lot of people are saying, we know that this company is doing greenwashing, you can use it, you can see it every day in the market. This will be picked up in the social media rather than your annual reports. And this is how investors are now using that new venue to understand if, for example, future climate investments are actually going in the direction they would like to see, and part of that strategy they would like to see. So there's tech that exists, and you all know it. Google uses it, Facebook uses it. That's again based on machine learning. That's able to scroll a lot of that social media information and provide that information back to investors. And that same tech is being used now for I would say climate exposure and climate risk analysis.
Yeah, thanks, Nadim. And and I guess to manage the clients' expectation and everything, you have your digital ambassador as well, your relationship managers who will be out there speaking to the clients and making sure that they are happy and address any concern or any feedback that they have. Yeah, so that always helps as well. And so thanks Nadim for sharing your personal experience, the challenge that you're facing. Okay, so I'll move on to the next segment. And so the next segment question actually basically will revolve around more on the market revolutions and maybe some of the friendly competition. I think just now you have shared a little bit about between the traditional players like the global custodian and versus the new technology players, the digital banks, and also the fintechs. So maybe to Nadim, do you see any upcoming growth solution that can really change the market? Perhaps any change for the intermediaries, or and any emerging market landscape?
Yeah, I would say there are definitely challenges out there, disrupting challenges, and we see them every day within BNP Paribas. We see them, and we need to know what they're doing and how how they are pushing the boundaries. You probably Stash Away is a good example of that. Revolut is not a good example of that. Those are all the niche players, as we like to call them, but not only limited to niche, but those are new players that are out there and able to enhance the client experience, provide a better service, and obviously at a better cost. And that's key for the clients. However, if I tie it back, do we as a bank, BNP Paribas, as a bank with all the different branches that we have, all the different industries that we're servicing across the globe, do we think we're going to be replaced by, the stash away of tomorrow? Not 100% sure. I think we'll see an environment where both can live together. Let me explain a little bit why this is. The banking industry is a very complicated industry. It requires your KYC. It requires your banking licenses. You need to have fraud teams involved. You need to do solvability is very important. Regulatory compliance. There's a lot of rules out there that are key if you want to continue to provide the necessary services, banking services to your clients. And what we've noticed is it's very difficult for a new player to be able to cover all that from the get-go. So what's happening is there's pretty much two types of evolutions that are happening today, I would say, or disrupting evolutions. One is you either have a player that looks at a niche part. So, Stash Away looks at investment decision making. So they help you with investment, advice, and they will make sure that investment advice is then put into work for you as a client. You can look at payment industry. I mean, there's a lot of payment solutions out there that make it better. But again, those are companies that are looking to make sure that they can cover some parts of the banking industry. And then you have another area where digital solutions are kicking up, and in specific areas. KYC, for example. KYC, which I've mentioned, is a key element of the banking industry. There are solutions out there. There's companies that are suggesting KYC platforms, allowing you, for example, and I know you guys are working on that as well, use STACS, allowing you to manage and streamline the KYC process, where your clients are putting in documents have been read by the different compliance teams, legal teams, relationship managers. All of that is centralized into a blockchain environment. So what we're looking is really two different trends. One is players that are positioning themselves in the niche area of a market, so niche, but a particular part of the banking industry. And second, fintech companies that are trying to solve some of those issues that have been there, or some of the frictions that have been there for quite a long while, by tackling blockchain or machine learning solutions for the banking industry. I myself, if I look back, I remember in 2017 when it was the beginning of I would say the first crypto boom in 2017. You had Bitcoin that was exploding at that time. It's exploding again, but 2017, I remember a lot of players and digital companies at that time were saying, "Hey, this is the end of the classic banking industry, guys. You're done. You're finished. So BNP Paribas, you better pack up and try to find a new way to make business." I think looking back at it, so we're 4 years down the line. What we noticed is, yes, digital assets are going to be part of that banking industry, and yes, digital assets are going to streamline some of that venue. Specifically, if you're a private equity firm, it's great to have a digital asset as a platform to solve some of that. The fact that you're just not listed, but you can be listed nonetheless. So I think. In an efficient way, or an efficient market that exists today, if you look at the stock market, the listed stock market, it's a very efficient market. It's a very, I would say, I don't see any way to really improve significantly the efficiency that already exists in the way that the market participants are acting. So the brokers, investment managers, potential dealers, etc. However, there are opportunities to improve down the line, down the investment value chain, for example, the settlement process. There are ways to say, well, today it takes us 2 days. Why can't we look at a solution to make that happen in the same day? And that's exactly where we have to look, and to make sure that digital technology can bring value where it needs to bring value. So in conclusion, I would say, you'll probably see the classic banks still exist in collaboration and work together with disruptors, if I can call them that way. But the standard thing stays. If as a bank, and I'm talking about myself within BNP, if we do not continue to evolve, if we do not continue to look at what's out there and how we can improve the services that we deliver to our clients, somebody else will do it. It could be a disruptor, but it could also be just another bank that is one step ahead of you. So that's key.
Thank you. Thanks, Nadim. And certainly great to hear about the collaboration. It's not really competition between the traditional players and the new kids on the block, but it's really all about collaboration and working together. Yeah. And certainly we fully agree, because that's that's the experience that we have with BNP Paribas, and we appreciate that as well. And final segment question, okay, before we go to the Q&A. And I think this segment question will be more towards the long-term outlook, okay, for the AWM industry. So maybe to Nadim, what do you think is the vision for the AWM industry? So what does good look like to you?
I think just look at the last year, right? Look at the last 2 years. Look at how COVID has changed our way of working. COVID has almost forced most of us, a lot of us in this financial industry, to rethink the way that we work. Look at this conference. We're not sitting in the same room. We're sitting where we're having a video discussion and a video interaction. So again, that would not have happened if we didn't have that digital platform allowing us to do this. And the same way that a lot of people are now working from home. You can see, for myself, I'm working from home as well, and it's gonna be part of the new norm. So that flexibility could only be possible through the new digital environment and the digital way of working that we have, where we do not have to be attached or located at one single point. So that already shows you how much the digital dimension and the digital transformation can help improve your day-to-day, your life and day-to-day, and your business going forward. And I've talked about climate very, very briefly, about the climate change that's going to happen, and the climate challenges that we're seeing. We have the COP that's COP that's happening, or that's in Glasgow. So it's a very important topic. What I think is, again, in that very important space, the digital technology will help us, guide us, and help us, for example, understand better what the impacts are. It's very difficult today for anyone to understand, what is my impact on the climate? What is the company's impact on climate if you don't have the data? And what we're noticing is there's a lot of data that's available now, and it's made available by, again, fintech companies that are out there. It wasn't the case 3 years ago. It's happening right now. So you see that companies that are able to scroll, as I've mentioned to you, they use social media as an example. Companies that are able to scroll a large amount of data and extract value out of that can be used for our climate change challenges that we're facing today, so that investors, but also consumers, can look at, what makes sense. From my own personal priority point of view, I would like to, if I put money aside for my future retirement, I want to make sure that money is invested only sustainable investments. It's very difficult. 3 years back, it was very difficult to find out if you were actually invested in sustainable, sustainable exposures. Very difficult. Today, it becomes a lot more easier. It's a lot easier to understand how much your direct investments have as an impact on CO2. You can have that calculated directly by your investment managers. So as an example, I think, climate change as an example, I think that really shows how digital technology is helping us to overcome some of those big, big changes that are happening today in our day-to-day world, with the COVID, with climate, and beyond. So from my point of view, we're still at the start of the journey. We're still at the beginning. Sure, there are many digital options out there. There are many solutions, but I still see that the real life implementation of those digital tech is only starting now. Blockchain. I'm using blockchain again as an example, but blockchain was a lot, correlated a lot to crypto assets and now digital assets. But if you look at the opportunities you can have with blockchain, it's just immense. And we're only seeing in the last 4 years, we're seeing real life examples of how blockchain can simplify and basically share information with many participants on a secure way. So again, I see this as the beginning and the starting steps in a great number of years to come in digital technology.
Yeah, thanks, Nadim. Yeah, so it's certainly very interesting as well, how the world has evolved. I totally agree with you. With the challenge that we've been facing with climate change and obviously COVID-19. And it's a good thing that we have all this new technology to help us to move along and to progress actually. Yeah. So now I think we'll conclude this panel discussion and we'll move on to the Q&A. So to the audience, if you can type your question into the Q&A tab. Okay, I think I do see one question here. Okay, I have a question for you, Nadim. Okay, so given your personal experience, what are the 3 things that each person listening to this discussion needs to have in their DLT strategy?
Okay. First of all, I would avoid using a DLT strategy, if I can call it that way. Just call it, a strategy to enhance something, your internal processes, or a strategy to improve the services that you deliver to clients. So that's step number 1. Step number 2 is probably to look at, once you've done that, you look at where are the pains. If you just want to implement the blockchain for the sake of implementing it, it's going to have probably 0 value for yourself as an organization, and even for your clients. So look at the pain points that exist today. Sometimes, and I'm using our Mercury project again as an example, but sometimes you just look at it, you have a pain, and you look at different angles to solve it. So, in the case of the derivatives that we couldn't just process because we're missing data, you could not use RPA, you could not use, your standard automation, you could not even use machine learning for that. You'd have to have an environment, a sort of platform where different people and different participants of the market are acting together and are acting together almost at the same time. So that sort of a platform environment from our point of view could only be solved by blockchain. So this is how you should look at it. Look at look at what you want to do. What is the value that you want to bring? Second, look at pain points that you might have in your organization. And third, then start looking at what are the options that I have. What is in my tool skill set? What are the different solutions that I might have? And the fourth one is, once you've decided what are the technologies that are needed to solve that, if you don't have it, go out and get it. So doesn't mean that you need to hire an entire team to do this. Just look at partners. There are partners out there that are happy to work with you. Sometimes, if you need to sell this solution to your clients, you can white label it. There are many, many options out there. So again, I think from a perspective, just start. The beginning is very important. So start to find the value that you want to bring and the solution you want to tackle, or the problem you want to tackle, to be more precise.
Okay, thank you. Thanks, Nadim. I hope that addressed the questions. Okay, I do see another question here from the audience. Okay. Hi, Nadim. Thanks for sharing your valuable insights. Earlier, you mentioned about setting aside funds for retirement based on certain ESG theme funds. So do you think that ESG funds will significantly outperform non-ESG funds in terms of returns?
That's the $1 million question, I would say. There's 2 ways of looking at it. So there's the way of, I would say, the long-term vision. So obviously, if you, and this is my personal perspective more than anything else. But if you invest into, heavily into carbon-exposed companies, like, for example, petrol industry, etc., do you think and again, that's a question I would raise to the audience. Do you think that, in 20 years' time, those companies that are only looking to extract petrol and carbon, heavy carbon materials out of the ground will be profitable still, or will make just as much margin as they do today? I myself have serious doubts about this. So what I would say is, on the long-term aspect, I do believe there's a high chance that companies that are looking forward in the next 10 to 15 years and making sure that they are preparing themselves for that climate change that's going to happen, those companies will obviously continue to deliver the growth that they have today and the growth they may have tomorrow. So that's, from my perspective, that's the first aspect. On the long term, I do believe there's value in investing into ESG type funds. Now, looking at the short term, it's a different game, right? So short term, and I'm talking about 2 years down the line, it may be a different story. I mean, if you look at the COVID impact, however, the last year was a good example of that. You probably noticed that we had a somewhat important market correction around the first quarter, between the first and the second quarter, where a lot of companies, the stock index went down. A lot of companies were impacted, obviously, by the insecurity related to COVID. Now, what was interesting to note, however, is that companies that were invested into ESG had a much lesser impact, were less impacted by the COVID situation. So they were much more stable, I would say. So on the short term, you could say, yes, there are some risk elements. So if there's high market movements, you could probably safer off with a company that's looking beyond the current trend. And the second, again, on the short-term basis, if you look at tech stocks, a lot of the tech stocks that are out there, I mean, Tesla is obviously, everybody knows it, but Facebook, Google, all those the GAFA companies that are out there, they're all pretty much low carbon consumer companies. So they've been, if you just look at that aspects, they've been obviously performing pretty well in the market on the short term. But that doesn't mean they're going to perform well on the medium term. But from a long-term perspective, again, I do think there might be some benefits in really looking at sustainable investments going forward, because that's going to drive a lot of the decision-making, one, by investment managers. So they are going to pick, as I said, in 2 years' time, we'll see them making decisions on investments. And in these decisions, every time they will look at the climate impact. So that's quite significant. 80% of the investment managers will look at the impact of their investments onto the climate impact. So what that means is, if you have a company that is, if you have an investment that has I would say, that has a good coverage of the potential climate risks, a lot of investors are going to invest in that. And when you have a lot of investors and market demand, obviously the price goes up. But again, that's my 2 cents on it. So long term, definitely. Mid-term, short term, it depends on what the market will do.
Thanks, Nadim. Of course, we know that you're not an investment advisor. Yeah, but thank you. Thanks for answering these questions. Yeah, and to the audience, yeah. So I hope that addressed your questions, and feel free to also go to your investment advisor for further advice. Just a little bit of disclaimer. Yeah. So okay, I do have another question. So I guess this could be someone who are maybe young, a student, I guess, or a fresh graduate perhaps. And what he's asking is, what we recommend students who are interested in this realm, and how can we keep up with the industry changes? Maybe kind of like from a mentor perspective, if you can help to answer this question.
So we love to work with students, and within BNP Paribas we try to promote internships. We need to have that fresh blood, and when I say fresh blood, it's fresh way of thinking, actually, more than somebody that's young. Generation Z, X, Y, whatever you want to call it. they bring a different view on the world. And that's important because it allows us to reconsider some of the conceptions and ideas that we might have in our organization. So, and that's why it's key to have them part of your, in your day-to-day lives and also in your decision process. So when you decide to go in a specific market or develop a specific product, they can be a goldmine in terms of experience and how they see and perceive the world. They're going to be the next me in 10 years time or 20 years time. So it's key that we listen to them. So what I would say is, do not, and again, this is my perception. If you look at the companies that a lot of youngsters or students are interested in is obviously everything that you read through the internet. Everybody wants to work at Facebook. Everyone wanted to work at WeWork and the likes, etc. So obviously there's a lot of media attention, but know that companies like classic companies out there are also going through that digital journey, and this is where you as a student can bring a lot of value, because you can make that change which is probably going to be much more difficult to implement in an Apple or in a Facebook, is going to be an easier one probably, because there's still a lot of change that needs to happen in, I would say, the legacy industry. So just be open to that. When you are looking for a job or looking for an opportunity, do not limit yourself to just tech because you like tech. Just know that there's a lot of companies that are looking to implement that same tech into their day-to-day lives, and this is where you can bring value to the organizations.
Thank you. Thanks, Nadim. I think that certainly helped. I hope that addressed the questions from the audience. Okay, I guess we are also coming to the end. Any last question from the audience? Okay, if not, I guess we are coming to the end of this fireside chat. My sincere thanks to Nadim first for his time to participate in this panel. To Nadim, any parting words for the audience?
No, it was really great to be here with you, David, and the rest of the audience. And we hope to see you just at 12. There is this, I've talked about Mercury a couple of times in this chat. So please join us at 12, and you'll see an actual live demo of that specific solution. So join us at 12, and we'll have another chat on that.
Thank you. Thanks, Nadim. Yeah. So to the audience, we hope you have enjoyed the fireside chat between Nadim and myself. And like what Nadim has shared, yeah, please join us at 12 p.m. Singapore time for the live demo showcase as well. And there'll also be recorded replay, okay, for this session. Thank you, everyone. Have a good day.
Thank you. Bye.
Bye-bye.